welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the key data points from the stock markets, the way the markets are moving at this point in time, starting from the benchmark indices to sectoral moves and all the stocks that are buzzing the most in trade today. Also, expert views as to how should you be approaching your investments and which are the stocks that you should be tracking for your portfolios. Now, all of that coming up over the next few minutes, but first up, a quick check on how the benchmark indices are trading at this point in time. Well, the markets have recovered from the day's low, in fact, are trading near the day's highest point. If you talk about the Sensex, it's trading at a 60,431. That's the level at which the Sensex is moving higher, with 130 point of a move on the upside. Talk about the other index as well, the Nifty 50, for example, that's also moved higher by about 0.16% at 17,842. Which are the top gainers that are leading to this kind of move on the Nifty index? Well, you can see it's the Bajaj twins, the big heavyweights that are really helping the markets move higher in trade today. Bajaj Finance up 2.5% and Bajaj Finserv also up by 2% in trade today. Apart from that, you can also see UPL, SBI Life and BPCL, some of the other gainers that are pulling up the index in today's trade. What, however, is not doing at this point in time is HUL. Just now we've received the earnings as well, and post that the first reactions have come in on HUL, and that has declined by about 1.5%. Power Grid, for example, has been on a downward trend right from the morning trade too. Sun Pharma, Axis Bank, HDFC Life, the other laggards at this point in time. Now, also when we talk about the other index movers, talk about the other sectoral moves at this point in time, you will be able to see that the Nifty Bank is absolutely flat in trade today, with financial services slightly moving higher in trade. The autos are in fact in a higher or a faster lane in today's trading action. We're also seeing some moves coming in on the metals pack. That's shining a little bright. IT stocks are shining brighter as well. 0.9% of a move on the upside. The realty pack continuing with their move on the upside. 2% uptick for that one. The private banks still doing better than the overall financial services space as well. Now, when we also talk about the PSU banks, that's where the markets have dulled out. If you see it, there's a decline of 0.1%. The pharma stocks have also seen a cut about 0.2 odd percent in today's trading action. But definitely some of the stocks that are moving, and that's going to be our focus of our discussion today. But first up, let's welcome our guest on the show, Mr. Kranti Bathini joins in from Wealthmills Securities. Welcome, sir, and thank you so much for taking the time out for this discussion. First up, your thoughts on the overall market scenario. How are you looking at investors' strategy to be? Is it the time that one should be really focused on stock-specific action, since we are seeing a whole host of earnings come about and the markets are really reacting on those specific numbers?
Yes, absolutely, Sakshi. This is the time investors need to focus on stock-specific action. Overall market breadth is in a positive zone as the market is at 17,850 levels. Technically, market looks strong right now, but we need to see how the next couple of days trading sessions are going to pan out, whether we could able to take and overcome the 18,000 levels, which is a sentimentally and psychologically important levels for Nifty. This is the crucial level because past 1 year, if you see the data, if the history is the clear evident, market nearly tried to sustain above 18,000 levels for nearly 7-8 times. Whenever it comes down below 18,000 level, there is a trading opportunity, and it's not able to sustain for a longer period of time at the 18,000 level. This time is different. We need to wait and watch because the global cues, all the moving parameters we need to taken into consideration over a period of time. But from the earnings season, we have a mixed bagger kind of earnings season, thanks the good earnings posted by Reliance Industries and banks like ICICI Bank and HDFC Bank. They've given some kind of support to the market. But overall, we are just progressing into the earnings season. Earnings season is the crucial thing to lead the market and sustain the market above 18,000 levels.
Sure.
Overall, market is in a mixed zone, but it's a more about a stock-specific market. One need to take the stock-specific action and result reaction with respect to markets are concerned at this point of time.
Absolutely, you're right over there. And some of the earnings have also come about, and we are also seeing some sharp reactions on the markets. Let's talk about Bajaj Finance earnings, for example. That has led to a spike in the stock in today's trading action as well. In fact, Bajaj Finance has delivered much better than street estimate earnings for the March quarter, and that is despite the big size and the base that the company has. Now, we have seen the momentum continue for sure when we talk about the company's earnings. As far as the profit is concerned, there's a sharp jump as well for FY23. There's a complete 30.5% jump at 3,157 odd crore rupees. The NII has increased 28% odd to 7,771 odd crore rupees. The revenues from the financial services firm have also jumped up about 31.6% at 11,359 odd crore rupees. So that's the kind of move that we are seeing, especially for this quarter. Also, the March quarter, we've seen the consolidated profit and the revenues also rise. In fact, the company has also announced a dividend for this quarter and the financial year as well. So that's something that one has to really continue to find out. CLSA has in fact stuck to the outperform call and has really talked about how there is Kohli's aggression and Dravid's defense that the company continues to display quarter after quarter in its earnings as well. How would you analyze the kind of earnings that have come about from Bajaj Finance, and what would you advise investors to do now?
The key takeaway with respect to Bajaj Finance results are concerned, Sakshi, we are in a high interest rate regime. But as we have been kept on telling on your show, we're quite positive with respect to the banking and financial services. Uh, the Indian NBFCs, especially the companies like Bajaj Finance, they stand tall in financial service sector and keep on posting good numbers. And in a high interest rate regime, normally there would be delinquencies can go up, but with respect to Bajaj Finance and most of the NBFCs are in India, their NIMs have been going up and posting a good set of numbers. That shows the underlying strength in the economy, despite of the contrarian view. Whenever there are interest rate hikes happens, there can be the instances where delinquencies can go up. But in India, we are seeing a paradoxical move when in a high interest rate regime, the NBFCs can post good set of numbers and they can control the delinquencies. It shows the underlying strength in the economy. Bajaj Finance is a very good stock to hold on, but expensive in terms of valuation. Of course, always good stocks in India comes up with a price. That's what the price tag Bajaj Finance always enjoys because of the technology, because of the management and the quality of the book they have. And over a period of time, the retail book they build for the company. So any dip, definitely investors with a long-term horizon can buy the stock. Whenever there was sometimes there was a ample liquidity of the stock, and also a lot of weakness was there in the stock. Those were the times with a brave heart one can take positions in these kind of names.
Right. Okay. Another stock that has been in news is, we'll talk about that stock as well. But HUL has also delivered its numbers just now, and I wanted to take your view on that as well. On HUL numbers, we have seen that the company has been buzzing in trade. The consolidated profit is up 13% on a year-on-year basis at 2,600 crore rupees as well. And we've also seen, if you look at the kind of jump we are seeing, and this is against a profit of 2,307 crores in the same quarter last year as well. Also, we have seen the consolidated income for the March quarter for FY23 for HUL has come in 11% higher at 15,375 odd crore rupees. The board of directors has also declared a final dividend of 22 rupees per equity share for FY23, together with the interim dividend of 17 rupees per equity share, which was paid in November. We've seen that the total dividend for the financial year has actually come in at 39 rupees per share as well. How are you looking at the FMCG giants numbers over here? Although we have also seen that the EBITDA has grown 8% for the quarter as well. So revenues, the food and refreshment revenue of 3,794 crore rupees. Moreover, the company has also said that they have completed the acquisition of 51% shareholding of Zywe Ventures Private Limited as of 10th of January 2023, and the same has been accounted as a subsidiary in the consolidated financial results as well. Your thoughts on the numbers this time?
HUL is a stock of all seasons, Sakshi, and last quarter can given some kind of inflationary pressures have been uh, reduced with respect to HUL is concerned. That's the reason we can see increase in the margins of HUL. Investors with a long-term horizon, definitely, even with respect to medium to short-term horizon also, one can buy HUL in their portfolio. One need to take into cognizance the stock names like HUL. These are the proxies for India's story and India's consumption story. One need to keep in mind back of all these macro reasons while taking any position names like HUL. The stock seems to be boring
Okay.
in a medium to short term perspective, but definitely the stocks will provide very good amount of stability and a long term growth for the investors. So one can buy the stock at the current level in a staggered manner for a long-term horizon.
All right. Another stock that I was just referring to before this is the stock that is in focus today, and that is Raymond's. The shares, gained about 9% to hit all-time highs as Godrej now looks to acquire the consumer care business of Raymond as well. Now, this is a news that we will get more information of in the evening, as both the companies will be coming out with their respective press confirmations on this news development as well. Now, we've also seen the stock has already risen. Raymond stock about from its 52-week low levels, the stock has already risen about 126 odd percent, and we have been seeing this news development really aiding to the sentiment in the stock. Now, Godrej Consumer Products is definitely in this advanced talks for a deal with Raymond for the consumer care business that actually includes Park Avenue male grooming brand. Also, so these are some of the reports that we have been getting, and definitely the company will be coming out with its reports later in the evening as well. But how are you looking at this development and the acquisition, and also going forward from here? What does it really mean for the shareholders of both the companies?
With respect to Raymond's is concerned, as you mentioned, Sakshi, it is one of the best performing stock. This in this market, delivering 120% return means it's an extremely outperforming stock at this point of time. Raymond's normally pursued as a for the complete man, that textile and uh, textile company. But whereas what happened is there are significant changes. There is a value unlocking has been factored into Raymond's books. Uh, from last few quarters, they have been successful in terms of monetizing their land bank and also developing the real estate business and becoming a formidable business in terms of their real estate is concerned in parts in Mumbai. Has been helping Raymonds to increase their earning per share, increase their margins and profits in past 4 5 quarters. And they have a very good amount of land bank in good pockets. That's what the momentum is happening with respect to Raymonds. And also they have some kind of value businesses, as you mentioned, the consumer care businesses and consumer centric businesses they have uh, in their books over a period of time. When they try to unlock this value and the non-core business is going to get valued at a decent price, which they have been valuing around 2000 crores. That's what the market sources says. uh, and that will help further unlock the value for Raymond shareholders over a period of time. Right now, we can pursue Raymond's as well as a textile company and also the real estate story that is emerging in Raymond books. They would be able to deliver the first set of their projects and the flats on time. That's what Raymond made a significant difference and made their footprints in real estate ventures in Mumbai region. So it's an interesting story going ahead. And coming to Godrej consumer care is concerned, it helps them to bring some kind of new products onto their portfolio of consumer business. So it's both the sides. It's a win and win deal for them. But Raymond's, we need this is the stock we need to watch over a period of time, and they would have made their recent investors definitely a complete man's.
Okay. Well, thank you so much, Mr. Bathini, for being with us on the show and discussing these recent earnings and the strategies that investors can adopt on each of these stocks right after the news developments and the earnings as well. And with that, we'll wrap up this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, many thanks for tuning in.
Always pleasure to speak to you.